Good morning, everyone. Thank you for attending today's webinar. My name is Brandon Garner. I'm the sales manager here at Superior Trucking Payroll Service. Today's topic for webinar is the 5 things your trucking company needs to be more profitable. Few housekeeping notes. All of your lines have been muted. If you do have a question that comes up during the webinar, feel free to put it in the question box on the panel on the top right-hand corner. That panel can be adjusted in size by clicking on the double arrow. However, do not click the black X button or you will be exited from the webinar. Today's webinar is going to be brought to you by Ascend TMS, the world's #1 rated TMS software. There's no need to schedule a demo with Ascend TMS. It's the easiest to use TMS software on the planet. And if needed, unlimited training is totally free forever. Your team will simply love the experience. Quick note about what we do. Superior Trucking Payroll Service is a full-service payroll administrator for trucking companies. Our proprietary software was specifically designed just for the trucking industry. If you'd like to know a little bit more about us or if you have questions, always feel free to reach out to myself. Or if you want to check out the website, a lot of great content on the website, truckingpayroll.com. Also, if you want to get a quote, there's a request a quote page there as well. And about the speaker. Today's speaker is Mike Ritzema. He is the founder of Superior Trucking Payroll Service, 20 years of payroll experience, 10 years of trucking finance experience, a former CFO for a 75 truck fleet and brokerage here in Grand Rapids, and he is a member of many transportation associations. And with that, I will hand it over to Mike.
Thank you, Brandon, and thank you everyone for attending today, or if you're watching online, whenever you happen to catch it. This is what we're going to talk about in the webinar today. There's the 3 things that every successful trucking company has. These are the 3 legs of the tripod. You can't be successful without them, and the rest of the webinar stems from these things. And then we get into what are the 2 affordable tools that every trucking company has to have. Doesn't matter big or small. And what are 3 strategies that you need to have to run your trucking business? What ones do you have to be successful? And then we have Q&A, anything about trucking. If it's something not in our wheelhouse, we'll tell you, but if you get listening to this webinar and you've got a question, we want to know about it. Whether it's live now or whether it's later and you're watching it on YouTube or on our website, go to the contact page and reach out to us. We're here to help. A few quick notes of my own. Most of these stem from all the webinars we did about FFCRA and the PPP packages and all the coronavirus stuff. I'm not a lawyer, I'm not a banker, I'm not a doctor, so I don't try to give opinions on these things. And we focus on the issues here. We focus on what we're trying to do to improve our trucking companies. We don't focus on one political party good, one political party bad kind of stuff. That's just not productive. And our mission, our company's mission, is to help trucking families. That's the families of the owners, it's the families of the drivers, it's the families of the billing people. That's our mission. And so we do webinars like this specifically to help trucking families, even if we've never met you. So what are the 3 things every trucking company that is successful, what 3 things do they all have? And without any of these 3 things, the tripod tips over. It's good this, good that, and good the other thing. So while you think about that for a second, hopefully the answers make sense. It's good loads, good drivers, good equipment. If you only have 2 of the 3, you're not going to get there. You got to have all 3 for obvious reasons. If you take out one of those, what's going to happen? Now, I don't know much about equipment, so we don't talk about equipment. I just know you need to have it. And there are plenty of other people out in the world who can tell you what kind of equipment to buy. And I'm not going to get into, oh, Kenworths are better than Freightliners or Freightliners are better than Kenworths, and people get really attached to their particular truck brand, and good for you. So we're not into that. We're with you, whatever you want to do. But we're going to talk about good loads and good drivers because those are the things that we know about. And so with that, there are 2 low-cost tools that every trucking company has to have, big or small, to succeed. And the first one is transportation management software, or TMS software. You just have to have it. It used to be, back when I got into trucking, only the big guys had the TMS systems because you needed to have a dedicated server in your server room, and you needed to have all these resources, and it cost multiple tens of thousands of dollars just to get in the door, which a trucking company is not going to be able to spend that kind of money, so they're going to have to improvise and make their own. It's not that way anymore. There's so much good technology out there. There's so many great people that know what trucking people need, that Ascend, who's one of our favorites here, is $69 a user a month. No sign-up fees, no year 2-year, 5-year contracts. So it's really easy to see what your cost is, and it's for the full system. It's not a trial system or a freemium model, as some people like to call it. There are others. There are other great systems out there. We like Ascend, but it doesn't mean that that's the only one that you could use. But that's, again, $69 a month. You know what your cost is. And the rate and load history alone, just knowing where you got your load from last time when you're trying to run the same route, makes it worthwhile. If you're based out of Chicago and you got a truck in Houston, you're trying to get home, you can just look for Texas to Illinois loads, and you can find, well, we got this load 3 weeks ago from ABC brokerage and it paid this much. So now you know what you're negotiating against, versus trying to figure it out from scratch again every single time, or relying on your memory, especially if you're calling a broker. Say, yeah, I think we got one from you 3 weeks ago. Well, I think already means you don't know, and it's not going to work. So this, the rate and load history alone, you'll get an extra $100 in one of your loads once a month, which more than pays for this. And it's worthwhile, and it saves you so much time. Just that history alone makes it worthwhile. And there's so many other parts of a good TMS system that we'll talk only a little bit about later, but it's still really important, and it's affordable now. And there's no good reason not to do it. Like I said, it pays for itself multiple times over. The next tool you need is driver applicant tracking software. It's a big mouthful there, but it's a way for you to find drivers in the 21st century, now that we're 21 years into it. I got some things on the slide here. We all know the driver shortage isn't getting better. It's just getting worse, which means finding drivers is going to require new methods on your part, and just new ways of doing it, new approaches. It's just not going to get better. So your goal is to make the driver shortage your competitor's problem. As long as you can find your 10 drivers for your 10 trucks, you're good to go. Then everything else doesn't matter. It's a macro problem in the whole United States, but not for you. And that's better for you, right? These things cost as little as $100 a month, and it's really tremendous the kind of value you get out of it. But if you found one driver a year by using your applicant tracking, it's more than paid for itself. And one of the ways it does it is it keeps the applicants that you didn't hire, it keeps a file on them for you. So if you offer somebody a job and they turn it down because they went to work for ABC Trucking, you can follow up with them in 3 weeks or 4 weeks and ask them, hey, is ABC treating you well? If not, we were still interested in you and we'd like to have you come over here. Before they get too far into benefit enrollment and things like that, where they start to put down roots, you can still get that driver if they're not happy. And again, one of those a year more than pays for this. And there's multiple kinds out there. What I want to show you, I mentioned the hiring funnel. It's like a sales funnel. For those of you who've been in sales, you've seen something like this before, but the top level is suspects, and then they go down to prospects because you got rid of some, and then you go to discovery, and then you go to proposal, and then you go to close being hired. Driver recruiting is very similar to sales in that you have a funnel and you weed out the not qualified people and the people that aren't a good fit, and you go down and through all these things. But then if you look at that greenish one, turned down offer, that's where you wanted to hire them and they ended up not taking your job because they went to work for somebody else. Those people are recoverable if the company they chose to work for ended up not being everything that they promised to be, which happens all the time. Ask your drivers. You can just go back and get those guys and you can turn them into the yellow, turn them into the hired. And if you're a small trucking company, you don't have to do it that many times, hopefully. to be successful. But yeah, it's such a big deal. Again, for $100 a month, you've got all this at your fingertips versus the driver that didn't want to work for you, threw his application in the file cabinet, never to be seen again, or in the trash, which you're not supposed to do, but that's not a huge deal. This is a way to find drivers more quickly and more efficiently. And as you know, that can be a significant burden on your time. Here's just a screenshot of the one that we like. Brandon, who introduced me, he's the expert at this. If you've got questions about how this would work, reach out to him. We'll put his email address in the last slide of the presentation today. But he's the guy. He knows all about this, and he can show you how it works and how you can have different tracking mechanism for different recruiters, if you used recruiters, if you were that big, or different ads. You could have your Craigslist ad be different than your Indeed ad. The ad could be identical, but you could track how they came in, so you'd know which one was a better deal. That might save you the $100 right there. And again, it's just about being effective with your time and being able to hire drivers more efficiently. And yeah, again, the impact is huge. All in, we're talking $170 a month for these two things, and that's using the ones that I'm suggesting. You might be able to find ones that are less expensive than that. So I went through the two tools, and I hope you don't feel overwhelmed. You shouldn't be like this guy in the picture. You should be like, all right, these are two things I could do today. I could sign up for a TMS today. I could go get applicant tracking, or at least start the process of getting applicant tracking today. It's super doable, and I know you can do it. So with that, we're going to go to the 3 strategies you need to have in your company. These are three plans you got to have, and if you don't have them, you're going to run into problems. The first one, we just talked about driver recruiting and using a tool to make that easier. The other side of that coin is driver retention. How are you going to keep those drivers you have from leaving? I mean, that's really the question. Every driver that leaves is one you got to go recruit. And so these are some things that components you want to have in your driver retention strategy. Make only good hires. Don't make that desperation hire. I know it's hard. I know you have an empty truck and a truck payment, and you've got a customer that wants you to haul a load, and you've got a driver that applies, but you know they're not a good fit. And you hire them anyway. And then something happens and they wreck the truck or make the customer upset or something. It was all done with good intentions. And every trucking company person's been there. You guys could all share stories about this. But just make the good hires. And if you have the applicant tracking software that we mentioned before, you're going to have a bigger selection of drivers to choose from. And that's going to help you make good hires. Low cost benefits and perks. I'm not talking about I'm not talking about health insurance, which you should consider, but that costs a bit of money, so I get that one. But things like supplemental insurance, or maybe you buy life insurance for them, $15,000 or $20,000 policy. It's really inexpensive. You can talk to your insurance agent or talk to an AFLAC agent or anybody like that. All that stuff is very inexpensive, and it'll help keep your driver sticky so that they won't leave you. Perks are things like having a driver of the month, even for a small company. It's just a reason to give your driver $50 and a gift card. Let them know you appreciate them. Things, company jackets, or put letter their name on the truck if you don't slip seat. Just stuff like that. It doesn't cost a lot of money, but it kind of ties them to you. So it's really worth doing. The next thing I listed is it's low cost, but not as low cost as the other things I mentioned. A retirement plan, specifically for small trucking companies like under 10 trucks. You should be able to do a simple IRA plan. The administrative burden is very light. The fees are very light. You're talking about $50 an employee per year or something in fees, and that's just for the ones that participate. So it's very inexpensive to do over the course of a year. You'd pay your driver the $50 to stick around for a year, so that's no big deal. But you can talk to your bank. They probably have somebody, or if you have a retirement person, talk to them. They can get you hooked up with all this stuff. If you're a bigger company, you need a 401k, and there's a little bit more work to that. But as a small company, you can do better. You can do simpler things. The next one I list is respect. Just treat your drivers like you like them. Talk to them, see how they're doing. because when they leave, they're firing you instead of you firing them. They're saying, I fire you as my boss and as my employer, and I'm going to go pick up this other boss and employer to do that. So it's almost like a performance review, just to check in. Hey, how are we doing? Are we getting you enough miles? Are we keeping your equipment in good condition? Are we getting you loads you want? Are just things like that. And hear them out, and they'll be so glad that you asked that they'll appreciate you that much more. And if there is a problem, you can find out now versus finding out in the next step, which I have in there, which is doing exit interviews. You should exit interview every driver when they leave, especially the voluntary ones where they told you they're leaving. It's going to hurt. It's especially in a small company, it's almost like trying to interview your ex-boyfriend or girlfriend. It's not going to be awesome, but it's really important information. And if they left over a retirement plan, and I don't know that that's why they'd leave, but just as an example, if that's why they left, then you could do something about it. You can stop future people from leaving. If they leave because you don't maintain your trucks, or this is what they're telling you. I'm not saying it's even true. I'm just saying that that's what they're telling you. Then you can do some things to address those concerns so you don't lose anybody else. Or so maybe that driver considers coming back if the company they're going to isn't any good. It's hard, I know, but it's important information. So I really encourage you to do it. If you need an exit interview form, our contact information is at the end. We can send you one. But you probably pretty much know the questions. Why did you leave? And if we fixed it, would you come back? Those are really the questions. So the next strategy, and this one you don't hear as much about on different ways you would get trucking education, is a weekly revenue goal strategy. Comes from my days as an accountant for the trucking company. How much does your truck need to gross every week for you to be profitable? And what I hear from a lot of people is, oh, well, we got this much per mile last week. That truck got $3 a mile. Well, that's awesome. Congratulations. But if it only ran 900 miles, you didn't make any money. So rate per mile is good. If we're talking about 2,500 miles at this rate versus 2,500 miles at a better rate, then obviously you take the better rate per mile. But rate per mile is not the miracle cure that people want to think that it is. You've got to turn those wheels. And so, we're looking at, I used to use $4,000 back in the day a week, but prices have gone up. The drivers are more expensive, the trucks are more expensive, the insurance is more expensive, and the fuel's going up. So 4,500 a week, you should be able to clear that every week. 5,000 is very doable right now with the spot market being as high as it is. You should be able to pull $5,000 a week per truck. And it's a nice, easy thing to measure. That's part of what I like about it too, is you can look at your revenue by truck in your TMS system that you're going to go get if you don't have one already. And you can see, okay, here's my revenue by truck. Well, this truck in the last month, you don't have to make it just 1 week. You can make it a rolling 3 weeks and triple those numbers or something. But in April, this truck made this much money. Like this truck made 22,000 in April. That's good. This other truck made only 16,000. Well, that's not enough. We got to figure out why that truck only made 16,000. $4,500 a week in 4.2 weeks, which is what April was, is 19.8. And so, if your trucks didn't make 19.8 in April, we got to figure out why. And typically it's one of the legs of the tripod, which is bad loads, bad equipment, or bad driver. Bad loads being you just got yourself into bad spots, or took too long to unload, or something went wrong there. Bad equipment is a breakdown, quite honestly. That's the easiest one. And bad driver is a driver that quits, driver that didn't show up, had an issue, whatever. Wrecked your truck, which caused other things. It could also be something else, but most of the time, if you're not hitting your revenue numbers, it's one of those three things, especially in a small trucking company where you've got your hands into everything. And it's not like there's a dispatcher who works, at home and you're not even talking to them. You know exactly what's going on. So this, you need to be able to know what your revenue per truck per week is, and you need to see each truck and look for outliers. That's going to help you determine where the problem is, which is important information to know. The third strategy you need is a cash flow strategy. Cash flow in trucking is just hard. There's so much money you need to get going to buy the truck, even just the down payment. the down payment on your insurance, and the 4 weeks worth of fuel, and the 4 weeks of driver pay before you get paid for load number 1, unless you take a discount or something. It's just cash intensive. And so we see more trucking companies that fail from no cash than no profit. You can lose money for a while. There's so many non-cash expense things like depreciation that fall into that you can go without a profit and still be a viable business for a while. But if you don't have cash, you're dead in the water. That's just how it works. So you got to have a plan for your cash, and you got to kind of budget almost in cash, instead of doing what they would call accrual-based accounting. Not to get too far into the weeds on the accounting part, but the cash part's what's going to matter to you, especially early on. So some of the advice we have in this is invoicing earlier. Just invoice as soon as your driver delivers. They need to send you a picture of the signed delivery receipt, and then you should be able to invoice from that. You should have it ready to go and out the email door, the same day. The sooner you invoice, the sooner you get paid. You should never ever wait to invoice. Well, I'm going to wait for one more load so I can do them together. Nope. We're invoicing every day. That way you get paid sooner. It's like the single easiest, biggest thing to do. Another thing you can do is look for lower deposits on things like workers' comp insurance. Look for fuel cards that don't require pre-funding. Those are big cash sucks, man. Those are hard, and you could use that cash in your business instead of having it sit on the sidelines with your work comp or with your fuel card or anything like that. Another thing is about factoring. Probably, especially in small trucking companies, a lot of you factor. And so for those of you who don't know what factoring is, it's selling your invoices basically at a discount. You get your money right away. I'm oversimplifying it, but you get your money right away, and then your customer pays the factoring company instead. It's a way that a lot of truck companies keep going. It's a very popular tool in trucking, but you want to make sure you look at the total cost. Your factoring company might tell you that, oh, we charge you 1.5%, but that's only if it's less than 30 days. On day 31, it goes up to 3%. Or they charge you a fee for every invoice they process, or they charge you wire fees. There's all these other things they can charge you. And some of them do and some of them don't. And everybody bakes it into their rate a little bit. So, you come out to the same place in the most part with every factoring company. So you just pick the one that seems the most compatible with your business. But look at the total cost at the end of the year. They'll send you year-end statements because you'll probably need them to do your taxes. And take your total cost and divide it by your sales. And that's your cost of factoring as a percentage. And that's the number you really want to know. So at some point, if you get to be organized enough and you can get your company stable enough, and you work with a good accountant, they should be able to give you a balance sheet and an income statement that you can take to the bank, and maybe the bank will finance your receivables at basically 0.5% a month instead of paying 1.5% or more to the factoring company. It's something to consider, and at least you can know what it costs you to keep using the factoring company. But yeah, having a cash flow strategy is really important because it's so hard. You guys are out so much money before you ever get any money coming in. So you always have to watch it. Finally, here's some other notes that I wanted to point out. The things that I described just now are very important. I think they're essential, but it's not a complete list. I've been around trucking for 20 years, and there's more to it than that. I can't just cram it into a half-an-hour webinar, unfortunately. And everything gets more specific after this, so it gets harder. Things like choosing a good insurance agent. Things like, which fuel card, making sure your fuel card gets you the best discount, making sure your drivers are using the right fuel card, things like deadhead percentage, all that stuff. That's all important, and you need all those things, but these are more foundational things that you need. And it's going to be really, really hard to be successful without the things I described. But it does go on from there. But again, start with the foundation, with the building blocks. The second thing is I just want to encourage you. Trucking's hard, but you've been through the worst part. You went through 2020 at the beginning when the rates went down into the floor right when COVID started, and you're still here. So if you got through that, you can get through anything. So I've got faith in you. And I like fresh food on my table in the winter, so it's because of you guys bringing it across country to Michigan. We can't grow a lot of fresh food in Michigan in the winter. So no, man, I'm so confident that you can do this. So just keep it up, keep on going, work on these things, and your trucking company will benefit as a result. And with that, we will take any questions that might be in the queue. Brandon, do we have anything in there?
Yes, we do have one. Was the 19,800 per month gross revenue billed per truck? The attendee is trying to figure out to understand the matrix. Has the matrix remained relatively stable?
Yeah, the 19.8 a truck, like I said, it did move. It's moved up a little bit. It used to be, 17 a truck. And it's gone up because insurance has gone up. It's gone up because driver pay's gone up, as I'm sure a lot of you have seen. And it's gone up because trucks are getting more expensive with all the new technology in there, and road taxes are going up. Basically, everything's going up except for a lot of the times your rate that you get. So fortunately, rates are pretty good right now. But that 19.8, that's like for me, that's the floor. If I'm not getting 19.8 a truck per month, then I've got problems, and I've got to address those problems. And until I get to 19,800 a month, I'm just not going to be successful. And if you got, the nice thing too is if you got all of your trucks, let's say you have 5 trucks. Again, this webinar is made specifically for small trucking companies, though, even though large trucking companies can benefit too. But let's use a 5-truck trucking company. If each of your trucks got to 19.8 in April, then none of them hit 19.8 exactly. So you have some excess in there. So you're going to achieve even more by making that your floor. You'll probably get close to $5,000 a truck a week, which is 22,000 for April. You can do it. So yeah, it's tricky to sit with, and you also have issues with fuel surcharge and how much that becomes part of your revenue. And we've got a tool that I'm developing, and as soon as I get it done, I'll send it out to everybody. It's just kind of explaining how I use fuel surcharge to figure out that number as well. But it's, if you can get everybody to 19.8, you should have plenty of revenue, and you should be in good shape. I hope that answers your question. If not, follow up with us. And if anybody has a question later, or they're watching this on YouTube, or they're watching it on our website, we've got some great links on this page. Our blog, we publish 2 articles a week, usually on Mondays and Fridays, and they're from your questions. So if you've got questions, email me. My email address is right on there. Email me, and I'd love to answer it for you. And I'd love to turn it into an article. Quite honestly, it gives me something to write about. If you've got questions about that applicant tracking system, Brandon's the man on that. So just use email addresses right there. Our phone numbers are here. We're going to send the slideshow to everybody. We're going to make the recording available on our website and on YouTube. You've got our LinkedIn and Facebook and YouTube pages. By the way, we're almost to 100 YouTube subscribers. So if you could help us get there by subscribing to our channel, then I can make that link significantly less horrible. I could make it like youtube.com/channel/trucking payroll instead of whatever that is. So we would really appreciate that. And also, Ascend, we talked about them. If you're a client of ours, you get 3 months for free. So, you can take advantage of that. They'll give 30 days free to anybody, but you can get 3 months. So it's worth looking into to see how a TMS can help you. I think it's worthwhile. But yeah, any other questions that come in later, our mission is to help trucking families. So email us your question, and we're happy to look at it and see if we can help you. With that, I don't see any other questions in the queue right now.
I did have one other question that I
Awesome.
didn't know if you want to talk about. You mentioned during the cash flow section of the webinar, you had mentioned looking for a workers' comp solution without a deposit. Can you dive into that a little bit more deeper? Do you have any examples that you may be able to refer?
Sure. Yeah, there are some companies, and we work with some of these guys, where some of the insurance carriers that will let you do what they call pay-as-you-go workers' comp. And so instead of you still do the estimate of your wages, but it doesn't really matter as much because in a traditional workers' comp policy, you're going to estimate your wages. Like I'll use 5 trucks as an example. You're going to have 5 trucks, which is going to be $250,000 in workers' comp wages. Then you're going to have some office for you or something, but that's going to be really small. They're going to take that, figure out your premium, and say, okay, on $250,000 in driver wages, let's say are $8 a hundred. That's going to be, what's that, 20,000? Yeah, $20,000 in workers' comp premium. They're going to want 25% down, which is $5,000, and then you're going to make easy payments of their other 15,000 spread out over 10 months, so 1,500 a month for 10 months, and then you get a couple months off to save up for your next down payment. And then at the end of the term, they're going to do an audit, and they're going to compare your actual wages to your estimated wages. And if you have extra wage beyond what you had estimated, you're going to owe more premium. And if you have less wage, you're going to get a refund. But still, you're having to put $5,000 down. It's $1,000 a driver, right? Well, there are pay-as-you-go workers' comp agencies that will let you just report your wage every week and just pay the workers' comp that you owe, workers' comp premium that you owe just for that week. And so we work with some of these guys. They'll want you to work with a payroll service because they don't want you self-reporting. They would want, for example, they'd want us to report it, and which we can do for you, and we can hook you up with them too. And they're in about half the states right now that will do pay-as-you-go workers' comp. It's a really neat system, but the nice thing is you keep that, number one, you keep that $5,000 in your pocket until you have to spend it, which is huge. And the other part is you don't have the audit at the end of the year where you guessed your payroll low and it turns out that you had some success and added a few trucks, and now you've got this, $10,000 work comp audit premium bill at the end of your year. That's not really the kind of present you want at the end of the year. So, but yeah, it's a really helpful thing. It's no deposit, which is again a huge cash flow boost. And it's nice that you just pay it as you're going. And so it just comes out of your account every week, almost like payroll and whatnot too. So hopefully that answers. And if you have more questions about that, Brandon knows all about it. And I know about it too. And you can reach out to us and we're happy to walk you through it and get you hooked up. I think it's a great program, and it's again, because cash flow is so hard, and this just makes it that much easier. So I really think it's a great idea, and I'm glad that the question came up. Anything else there, Brandon?
I think that's it.
Awesome. All right. Well, if anybody has any more questions, hit us up. That's why we're here. We'll try, and if we don't know the answer, we'll tell you we don't know, but we know a lot of people in trucking and we can connect you with somebody. And with that, we're going to end the webinar. Thank you so much for watching and listening, and we'll see you again in another month or so with another webinar. If you have any topics you'd like us to talk about, let us know. Thanks a lot. Have a great day.
Thank you, everyone. Have a great day.